Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about ZAI LAB LTD quarterly report. ZAI LAB Ltd offers a diverse range of products and services across various medical conditions. Its commercial products include Zejula, an ovarian cancer treatment (VYVGART), a treatment for generalized myasthenia gravis and chronic inflammatory demyelinating polyneuropathy (NUZYRA), a treatment for community-acquired bacterial pneumonia and acute bacterial skin and skin structure infections (Optune), a glioblastoma multiforme treatment (Kinlock), a gastrointestinal stromal tumors treatment (Zacjuro), a hospital-acquired and ventilator-associated bacterial pneumonia treatment caused by Acinetobacter baumannii calcoceticus complex Augtero, a ROS pro-oncogene 1 and non-small cell lung cancer treatment. The company's pipeline includes various products in development, including bemarituzumab, an oncology treatment tumor-treating fields, an oncology treatment tisotumab vedotin, an immunotherapy treatment repotrectinib, a targeted therapy for RO-SON-positive non-small cell lung cancer and other cancers efgartigimod, an immunotherapy treatment xanomline and trospium chloride. Treatments for neurological disorders. ZAI LAB Ltd also has partnerships with various companies, including Tesaro, Novocure, Decipher Pharmaceuticals, Paratech Bermuda Ltd, Argenx BV, Bristol-Myers Squibb Company, Amgen Inc., Innoviva Inc., and Karuna Therapeutics Inc. The decline of ZAI LAB Ltd stock price. A year of challenges over the past year, ZAI LAB Ltd's stock price has experienced a significant decline, with drops of 19.51% and 18% in the last 12 months, and a 26% drop in the most recent month leading up to November 6, 2025. Several key events have contributed to this downturn. A disappointing Q3 2025 earnings report was a major blow, as the company reported a notable revenue miss and exceeded forecasted losses per share. The discontinuation of Amgen's clinical trial for bemarituzumab due to insufficient efficacy further eroded investor confidence. Additionally, a legal investigation into potential misrepresentations or negligent actions by management amid increased competition has raised concerns. The broader market also played a role in the decline, as ZAI LAB's revenue growth has been less than that of its competitors, leading to expectations of persistent underperformance. These challenges have collectively contributed to a challenging period for the company and a substantial drop in its stock price. The primary drivers of revenue growth or decline in this company are multifaceted, but can be distilled into a few key factors. On one hand, product revenue growth is driven by the success of certain products such as NUZYRA and OPTUNE, which have seen significant increases in sales due to expanding market coverage and penetration. Additionally, regulatory approvals for new commercial products have contributed to revenue growth. On the other hand, collaboration revenue has declined, with a notable drop from $418,000 in 2024 to $734,000 in 2025. This decline is likely due to changes in partnership dynamics or shifting priorities within the company. The performance of individual products also plays a significant role in revenue growth or decline. For example, Zejula has seen a decline in sales due to evolving competitive dynamics within its class, while VYVGART and QINLOCK have experienced modest increases. Overall, the company's revenue growth is heavily influenced by the success of specific products and partnerships. Net income and profit margins. A shift in trends. The financial summary reveals a mixed picture of net income and profit margins. For the 3 months ended September 30, 2025, there is no specific information provided on net income changes. However, for the 9 months ended September 30, 2025, research and development expenses as a percentage of total revenue decreased to 159.3% from 182.2%. This indicates an improvement in profit margins due to reduced R&D expenses. The decrease in R&D expenses as a percentage of total revenue can be attributed to various factors, including share-based compensation and income taxes. Despite the lack of specific information on net income changes, this trend suggests that the company is making efforts to optimize its financial performance. The company's financial performance indicates a strong ability to generate cash from its core operations. With an operating cash flow of $717.2 million as of September 30, 2025, the company is successfully converting earnings into liquid assets. This positive trend suggests that the business is financially stable and capable of meeting its obligations, positioning it for future growth and success. The company's financial situation has undergone significant changes in recent years. Notably, its short-term debt level has skyrocketed by a substantial 54% from $131,711 to $203,026. This increase is a cause for concern and may indicate potential liquidity issues. On the other hand, interest expenses have decreased compared to the previous year, with a notable drop of -$1,400,000 in 2025. However, it's worth noting that interest expense increased by $0.7 million, 3 months, and $2.5 million, 9 months, which may suggest some fluctuations in interest rates or debt repayment strategies. Overall, while the company's short-term debt level has increased significantly, its interest expenses have decreased, indicating a potential shift in financial priorities or management strategies. Management is optimistic about the company's outlook, citing several key strategies and initiatives that are expected to drive growth and revenue in the coming years. The company plans to commercialize approved products, generate revenue from these products, and invest in research and development activities to advance its pipeline of potential best-in-class and first-in-class products. Management is focused on expanding its presence in key markets, including Greater China and the United States, and expects product revenue to increase through increased patient access and new product launches. The company has also initiated a global registrational study for one of its products and plans to file for regulatory approval in mainland China by 2025. In terms of funding, management states that the company has sufficient capital to fund operations for at least the next 12 months, but may utilize debt arrangements or consider additional funding sources to bring its strategic objectives to fruition. Overall, management's outlook is positive, with a focus on driving growth and revenue through commercialization, research and development, and expansion into key markets. Acquisitions and divestitures overview. The company made notable transactions in the financial period, including acquisitions and divestitures. On the acquisition side, the company purchased 251,319 shares at an average price of $32.59 in the third quarter of 2025. Additionally, there was a decrease of $36 million in intangible assets acquired. In terms of divestitures, the company sold its equity investment in Macrogenics, resulting in a $1.2 million increase. Overall, these transactions demonstrate the company's strategic efforts to manage its assets and investments. The company's financial summary reveals that it has not paid out dividends to its shareholders. There is also no mention of share buybacks in the provided documentation. This suggests that the company has chosen to retain its earnings rather than distributing them to investors through dividends or repurchasing shares. Concerns about inventory buildup or supply chain disruption are evident in our recent financial performance. The data reveals a significant increase in both finished goods and raw materials inventory over the past year. Specifically, finished goods inventory rose by 68% to $16,577, while raw materials inventory increased by 70% to $9,302. Furthermore, we have recorded inventory write-downs of $0.6 million and $0.8 million in the 3 and 9 months ended September 30, 2025, respectively. These statistics suggest that our supply chain may be experiencing strain, potentially leading to disruptions in the future, if not addressed promptly. That concludes the financial summary for ZAI Lab Ltd. Feel free to comment below, and I will be happy to answer them when possible.